Okay, we have got a powerful show today because it's three stocks that LikeFolio loves that the market hates right now that could, double, triple, or produce significant returns in your portfolio over a short period of time. And so we asked each one of us, Megan, Landon, and Andy, to come up with their one stock for this show. Not necessarily our entirely favorite stock in the entire LikeFolio universe, but pretty close because these are all beaten down names that LikeFolio data shows high potential for. So, Landon, we'll start with yours because it's the most boring one. You always want to start a show with the most boring thing possible. So we'll leave with Landon and tell us about your stock. Because actually, I like it as well.
I'm going to try to sell this boring stock. So it's basically a defensive play, right? The markets are struggling. Everyone's worried. And you've got a company that produces an addictive product and kicks out a dividend. So if you don't know who I'm talking about, it's Altria, ticker MO. And this is the reason that I like this is the purchase intent was falling, the stock price fell, but now purchase intent is starting to pick back up. And effectively that is consumer demand. So people are talking about using their products more. And this is, like I said, it's a dividend favorite. It's a defensive stock. If the economy continues to struggle, then having your money in this type of company, and I see this as the leader of defensive companies, is a very safe place to be. Now, my personality, generally I'm not the safe guy, and so that's why Andy's giving me a little bit for this pick. But in this type of market, I think you got to be smart, and I think some of your portfolio, you can make an argument for some of your portfolio going into a name like Altria.
Yeah, it's a big dividend. I think the dividend yield is over 8% now, which that's nice to have kicking out into your...
And it's been consistent for ever.
A very long time.
Forever. I mean, they just kick it out.
Yeah. The stock pays this dividend quarterly. It's increased consistently, like you said. But the one thing, the knock against Altria right now, you can see the stock fell from 55 to around $40 a share on kind of regulatory concerns around their vaping products, the Juul, vaping stuff, and they made a big bet on that, and so that could cost them enough that the dividend could be a little bit in trouble. But I think that ultimately you've got it right, like addictive product that no one's going to stop buying just because there's a recession.
Right.
They can pass through pricing to their customers really, really easily. And so I like this. I think it's a smart play as part of, kind of that defensive portion of your portfolio. Right. Maybe generate some income.
Not all in on it, but maybe part of it. And I would say that a lot of the reason that they've seen a decline is likely due to some of the ESG movement where this is basically the anti-ESG stock, right? A product that gives people cancer. It's not great, it's not green and all that. So I think that funds move out of that, and that's probably what a lot of the decline came from. But in the end, funds and investors are going to go where the money is, and this is a moneymaker. So if you don't have a problem with what they produce, it's not a bad stock to own in your portfolio.
Yeah, I feel like this is every mother's worst nightmare.
You're right.
But
I'm advocating for the stock, not the product.
Correct. And I was actually curious whenever you brought this up, and so I think one thing that's interesting is their Marlboro brand is really generating a lot of mentions now. It's almost like this retro vintage, as horrible as that sounds.
Yep. Big comeback.
Brand resurgence. So definitely something there to the demand increase that we're recording just across the board.
All right, so we like MO down under 45, under 50. Where's your price on that? Your buy up to price if you're thinking about
I would
MO
say 50.
$50.
I'd be comfortable up to 50.
Yeah, I think so. Even at $50, the dividend yield is very significant and generating income for you. And I think also historically, anytime you can buy MO on a dip over the last 25 years, you've done well.
Right, exactly. So that's the boring one. Who's next between you two?
Megan can go next. Yeah,
right. More exciting.
Ladies
All
second.
Right. Ladies second. Perfect. So the one that I'm bringing to the table is Adobe. And so this was one where, this was one of our big pandemic winners, because all of a sudden you had people doing work from home. You needed, just the functionality to be able to do work online, and also collaborative tools. And Adobe's design suite provides a lot of this. But I think the story of late, this is my rationale, if you want to know my reasoning for picking, is, do you guys remember whenever Amazon entered the field and everybody was like, man, Walmart and Target are screwed because everything's going online? And then what happened? Walmart and Target adapted. And then Walmart and Target, after putting in the resources to, changing their strategy to meet the digital demand, actually started competing and performing better than Amazon.
Right. Yep.
So it was kind of the pendulum swung back the other direction. I think that we're seeing early signs that the pendulum is swinging back in Adobe's direction, because here's what's happened. You've got a lot of smaller, lesser known companies like Canva, which I know internally that's, we use Canva for a lot of our social tools and things like that, because it's super easy to use. You can open up Canva, any person, and basically use it out of the box. With Adobe, you guys use
learning
Photoshop.
curve.
There's a learning curve.
Massive learning curve. This used to be Adobe's defensive moat, was that once you mastered their software, that switch was really hard, because you were going to have to go master this other software, and you just don't want to do it. It's like, can't teach an old dog new tricks.
Right.
Well, now that there is a lesser barrier to entry for some of these competitors, I think Adobe caught on, like, oh, wait a second, we're going to have to flip our strategy a bit so that we remove those barriers to entry, so that people can come back in and we can get these new learners, these beginners. So last week they announced, it's really interesting, it's Adobe Photoshop Elements and Adobe Premiere Elements. And this is basically like a dumbed down version of these softwares, that it's all driven by AI. So it's like magic. So you can do all of these things and you don't have to be this uber professional. Now, to be clear, all of the professionals, they're using Adobe, right? They're not using Canva.
Right.
But now you're building this pipeline of beginners to get back into your ecosystem again.
Yeah. And it's foot in the door, right? And they have a
Correct.
subscription model. So now they can keep their foot in the door with the early adopter and bring them up the product ladder over time. And you can see the stock is down over 50% just in the past year. And another one where it's kind of hard to make the argument that buying Adobe on dips in the past hasn't, and this is more than a dip, hasn't, absolutely paid off.
And then meanwhile, look at Happiness.
Yeah.
You got Happiness
People
rising.
love Adobe products.
Well, and one thing that they did with these newer, lower level products is that a lot of the negative sentiment where people were like, man, we're getting like screwed with this subscription model. And so they're actually offering this lower level product for just a one-time fee. You don't have to have a subscription. So you can like buy it, become addicted to it, and then they'll get you in their upsell cycle.
Yep. No,
they also acquired Figma.
When you have an 85, and when you have an 85, 87% happiness level, you're going to get people in the upsell cycle, and you're going to hold on to those subscriptions. Churn is going to stay low. So love that out of Adobe. What's the price of the stock right now?
It's trading at levels it was in like 2019.
Yeah. So under $300 right now. Yeah. 285, probably 300 today. Where do you like it up to, Megan?
I mean, I think that you could justify this around 300 for sure, maybe even 350.
Yeah.
What do you guys think?
Yeah, big upside. I mean, it's 50% off its all-time highs.
You could go for more.
It's crazy, that run and pullback that it's had. And this is one of many companies that have changed their model from, you buy Photoshop 3, now we're going to sell you Photoshop 4, now we're going to sell you Photoshop 5. Like, they had to keep re-upping and making that one-time sale, and they moved to the recurring subscription model, which is the move. I mean, Microsoft did it with their Office products. Everybody's kind of realizing the power of subscriptions, but I do like that they're recognizing their competition and saying, oh, it's easy to use and it's cheap, no subscription. All right, we can do that too. Yeah. And Canva's a little nervous on that move.
100%. And they acquired Figma, which is another software that we've used before. And a lot of people speculate that part of the reason, not only are they getting this collaborative program for, websites, apps, any type of digital output that you're doing, any tool that you're doing, but they might be able to apply the collaboration elements from Figma on their other services.
Yeah.
So you know what I mean? You can take some of that, because that's what people really liked about Figma, is that you could be a team remote working from all different places and collaborate on the same piece.
Yeah.
So
Yeah.
anyway.
So cross-platform functionality is a
Right.
big deal. And Adobe's been awesome at that
Yeah.
across all of their products historically.
Yeah.
Yeah, I
Apple's
love it.
probably the only company that's better, right?
Yeah, Apple maybe it's no one's going to touch Apple in that use case. I think okay, I'm going to buy Altria and I'm going to buy Adobe. You guys have convinced me. Now I'm going to try to convince you on Sofi, SOFI.
Right.
This is a bank / brokerage / crypto broker. It had an awesome run since its IPO. It went from $12 to nearly $20. Recently, it's been under $6. So more than 2/3 off all-time highs that were just hit fairly recently. But I like this company a lot. It's kind of a moonshot type of, the opposite of Landon safe play, just kind of your big bet, looking for multiples type of return. It could go to zero, but it could go very high. And the reason I think it could go very high is I think this is a company that's executed really well on multiple fronts. First of all, from a product side, the product is very easy to use. It's got some social elements to it, but mostly it's just easy to use. It's kind of like Robinhood in that respect. Whether you're buying crypto, buying an ETF, or buying an individual stock, they've pretty much got the flow nailed so that people can do it really easily. Or they can set up a bank account, transfer money between those two things really easily. So I like it from the product side. From the marketing side, I also like what they do because they attach themselves to the student loan concept. This was a place to consolidate your student loans and take on that challenge. Part of the reason the stock's gotten dinged a little bit is because of student loan forgiveness, ironically. But I think long term they've shown marketing chops. This was the only place where you could buy Rivian's IPO. They had an exclusive deal
Really?
to do the Rivian IPO. That was the only broker where retail investors could do that. And they opened a ton of accounts because of that, because of the hype around that. I know several people that opened a SoFi brokerage account just so that they could participate in the Rivian IPO. And now SoFi has those funds, has that transaction history. And so like them from a product perspective, like them from a marketing perspective. And then I just think that the digital wallet trend is absolutely here to stay. It's explosive. We see the growth in it in LikeFolio data, people talking about using a single app for multiple financial functions, and SoFi is nailing that. So I think at under $6, I love it. I like it under 10. I think this is a stock that could be, a $30, $50, $100 stock 5 years from now, if they can make it there. Interest rates have hurt the stock because they have to borrow money in order to play the game. So their cost of doing business has gone up. But I do think, if they make it, if they don't go to zero over the next 12 to 24 months, this could be a serious real winner, because I love the way the company executes.
If you look at the price versus the mentions, it's stark, right? I mean, it's kind of like right place, wrong time. They have taken off. They have good adoption.
Yes.
And it has absolutely sold off since the IPO. I mean, it had a little run there for a little bit, but it's really sold off. What is that, cut in half since the IPO, or even more?
No, by 75%.
Okay, got it. Yeah, so significant from highs and half or more from IPO.
Yep.
Right.
But significant sell-off. And so this is one of those sort of divergent opportunities we've talked about with LikeFolio, when you've got our data going one way and the stock price going the other. Basically, that's LikeFolio data saying we disagree with the market.
Yep.
Right.
And more often than not, they come back together. So in this case, because the purchase intent and the usage is going so much up, with the stock price down, that would be a very bullish divergent opportunity. This is one that we'd be betting on, again, if it doesn't go broke.
Yeah, if they don't go broke. Look, I don't think zero is necessarily in the equation, but it definitely could. All stocks can always go lower. Every stock, no matter how far it's gone down, can still go down 100%, right, from where it is today. And so you have to keep that in mind. But that's 3 great stocks. Altria, addictive product that's picking up consumer mentions, especially around its Marlboro. How do you say that? I'm not a smoker.
Just swallow
Marlboro brand.
I think they do that on purpose.
Is picking up, and we like the stock up to $50. Adobe making moves in acquisitions, unbelievable consumer happiness, subscription model, and now getting their foot in the door with consumers, in a really easy to use way. Like the stock up to $350. And then Sofi is just like the moonshot bet on the digital wallet trend. Love their marketing, love their technology, and like the stock probably anywhere up to $10. Love it under $6 or $5.
Right, and there really is a bottom. I mean, it's not going to zero. Once it gets so low, it's incredibly every dollar it goes down, it becomes more attractive to buy for a competitor. Yeah. So that's really not very likely. But between the 3, it's a kind of a cool portfolio.
Yeah.
You got the safe, defensive, give me some dividends. You got the big boy who's defending against smaller competition and doing well, and then you've got the moonshot. So it's kind of a balanced, unusually balanced portfolio.
So that's how we do this at LikeFolio. We do this every day. We do this with hundreds of stocks. We're constantly looking for kind of that best opportunity, that consumer data, that consumer insights that LikeFolio derives, and how it creates opportunities on Wall Street. If you're interested in that, go to LikeFolio.com, put in your email address. We've got the free daily drop product that just sends you these types of notes every single day to get your brain cranking on the opportunities that the market may be providing. We don't spam. We don't sell your stuff to anybody else. It's just really great free content. And then hit the subscribe button on whatever platform you're on. And with that, I think we'll close it out. Thank you, Megan. Thank you, Landon. And I'll thank myself because I think mine was the best stock. So until next time, we will see you guys later. Appreciate you listening.